right, we're going to do the accounting equation. So like we said here on the balance sheet, in the balance sheet, total assets must equal owners' equity plus the liabilities. So if we go back on this, let's quickly see here. There is an image here that we can zoom in on. It will show us a little bit better quality in a moment. So here's the whole accounting cycle again: the transactions, the source documents, the journals, which is the cash receipts journal and the cash payments journal, the ledger, general ledger, the trial balance, the financial statements, which includes the income statement and the balance statement. Here we have the accounting equation. Just like we just saw, the assets are equal to the owner's equity plus the liability. So what will we do when we do the accounting equation? The steps are the following. Read the transaction and make sure you understand the transaction. What is going on in this transaction? Then number 2, write down the amount in the transaction. And then number 3, you identify what the account name is. So let's say, for instance, we have the Pick and Pay. You will say, okay, it's for Pick and Pay. Number 4, you classify what type of account this is. So is this an asset? Is it an owner's equity? Is it an expense or an income? Or is it a liability? Now, there's a beautiful little picture that I saw that one of your classmates posted today. Oh, where is this picture now? Here it is. Oh, let me turn this around. All right, here is the picture. So we look here at what assets are. This is the same things we just discussed. Assets are lands and buildings that you own. It can be equipment, machinery, vehicles, trading stock, debtors, the money in your bank, the cash float, and the petty cash. So all the things that you own are your assets, things that are yours. Liabilities are things like things you are responsible for, like for mortgage bonds and loans, and your creditors, people you owe money to, and your bank overdraft, the money that you owe to the bank itself. Owner's equity would be your capital and your drawings. Apparently, capital is a positive, a credit, a debit, credit, and drawings is a minus for you. Your income here is things like your sales, renting income from properties that you rent out, your interest on that income or commission income. Expenses. Expenses are things like the cost of sales, your purchases, the things that you buy to resell, your material costs, your rates and taxes, your water and your electricity, things you have to pay to the municipality, your telephone, the salaries, wages, stationery, things that you, consumable stores, what is that word? Anyway, things that you can eat, your interest expenses on, like the interest on loans, for instance, and so forth. So all the things that you spend money on, and this is all the things that you get money from. And let me see, what is the next step? Here, where do we go? We want to be here. Okay, so in conclusion, your assets will have pluses in the debit side and minuses in the credit side, right? Because these are the things that it's a positive for you that you own things. The owner's equity, I don't know exactly why that is, but just remember that. And your liabilities are minuses on your debit side because it's bad for your business technically to have liabilities, but everybody has liabilities and it will go on your credit side. Owner's equity, I don't understand why that's negative, but I'm pretty sure you do. Let's look here. This is identifying different things. This is probably a exercise that you did in class, so I can't explain that to you. But if we look at this picture again, why do I keep closing it? It doesn't make sense. Oh, I have like 3 open of the same thing. That helps. Okay. So she wrote the exact same thing that the teacher had. Let's look at this little thing here. Your interest of your expenses or the interests on loans. And here we have amount. Let me just pull. If I figure this out correctly, here, step 2, identify the amount. We go here, how to identify the amount. So is the account the bank? On the bank statement, have you received it or have you paid it out? And what is the other account? If it's anything other than the bank, have you received it or have you paid it? And then you identify, number 4, classify the name of the accounts. Here we go. Then you will classify it there as well. Okay, so that's it for now. We will figure this out together tomorrow. And then we will also practice some examples because there are many examples on your Google Classroom. For instance, let me show you some. Activity 1, for instance, good thing to practice for the exam. This assignment here that you did, also a good thing to practice for the exam. The general ledger introduction. Use the following cash journals to record and complete the general ledgers as indicated in your workbook. Very good practice to do that. I'm guessing this is the answers of that specific exercise. We will definitely look at this together. And here is another example that you did. So, and that's it on Google Classroom. Really nothing. The teacher just said, hey, you can find it on Google Classroom, but I don't see anything more than this. And also she did not tell me what book you guys are using. So we will definitely look at it together and try to figure it out. Okay, thank you for joining me for entrepreneurship and business studies, science of the things that I could figure out. Okay, bye.